What would you attribute this 22% jump to, and what have been the capacity enhancement or the realizations for the quarter gone by?
I think if you see the last couple of years in Vedanta, it's been a period of consolidating and putting all your capacities to work. So the aluminum business ramped up to a 2 million ton exit run rate. The oil business did well. It did well to arrest the declines, the natural declines, but it exited with almost 200,000 barrels of oil per day, which is the highest in the last 3 years. The zinc business touched another record high between international and domestic zinc. We were almost at 1.2, 1.25 million tons, well on our way to becoming a 1.6 million tons run rate by the end of this year. That's a fiscal 19. So if you see across all businesses, it's been a story of volume for us, and of course helped by prices. The second half of fiscal 18 was quite favorable in terms of prices, especially zinc, I would say, and to a certain extent price strength in aluminum as well. So I'd put it all down to some smart execution, operational execution, and volume ramp-ups which have culminated in the last 18-24 months. So we've hit these kind of run rates. If you see the top line, the quarter was about 27,000 crores plus. I was making a point yesterday that we've hit a run rate of more than 1 lakh crores. That is a nice milestone to have on our progress card.
Right. In terms of, going ahead, how have your average realizations across the business panned out, whether it's aluminium, copper, zinc, how have they moved? Have the move been in tandem to the global prices?
Yeah, absolutely. If you see the way this business works, the pricing is pretty much global pricing as landed in India if you're selling in India. Of course, for us, it's a global market that's open. The pricing very closely reflects the commodity movements, plus minus, I would say, a month or 2 months, depending on the price agreement. So we do see a level of strength in zinc. Fundamental demand-supply gap is there. The supplies went out in the last 7-8 years when the investments came down. So this will continue for another 18 months or so when new capacities come on stream. So zinc we do expect will be about $3,000 per ton. And of course we get a premium on top of it, another $200 premium for selling in India. Oil Brent looks strong, about 70, 74, 75 is what it is at this point of time. It's just about the right price. It's been the highest in the last 2-3 years. Aluminum, I think it's again a bunch of supply side factors. One, the China production has definitely come down by about 3 million tons. That's about 5% out of the global production because of environmental and other concerns. And at the same time, given all the US sanctions against certain producing countries and corporations, that's added to the temporary supply pressures in aluminum. So should stay at these levels or maybe slightly higher levels for some time to come. So I think these base metal, and needless to say, silver has been pretty strong as well, and we produce almost 600-700 tons of silver, almost 80% of India's sort of requirement we fulfill. So that's where the prices are at this point of time. They are favorable, but at the end of the day, we focus on what is in our control, which is absolutely on volumes, operational excellence, and ensuring that the return on capital employed is attractive to all stakeholders.
Now, your oil business has been an outperformer after many quarters, and the reversal of the 7,000 crore impairment charge in the oil business indicates your confidence. So, what is making you so bullish?
Well, excellent observations on the oil business. If you see in the oil business, what we've been saying for the last 18 months, that we have about 7 or 8 growth projects ranging from tight oil, tight gas to our Barmer Hill formation to more EOR and the next level of alkaline surfactant polymer, plus expanding our surface facilities where we process the crude oil, crude Brent rather. The point here is we said we are working on all these projects. 18-24 months ago, the break-evens were at $80. We did a lot of work on technology, reduce the capital cost. We had a smart way of commercially executing these projects by asking for bids which are linked to outcomes rather than issue 1,000 purchase orders and manage the whole project yourself, as well as the factor prices corrected, thus reducing the capex. So a combination of all this ensured that all these projects worked at $40 Brent. At 40 Brent, we are able to get about 20% IRR. So you can well imagine what the IRRs would be at the current Brent levels. And that's what gave us confidence to announce $2 billion of gross capex investment in the next couple of years to take this production up from the current level of around 200 kBOPD to almost 300, 350 kBOPD in the very near future, probably in FY19. If you see our guidance for in FY20, if you see our guidance for FY19, we're already at 225 to 250 kBOPD, which is anywhere between 22% to 35% increase in volumes.